everybody, Josh Sigurdson, World Alternative Media here, and of course we're joined by author and economic analyst here at WAM, John Sneisen, and Deutsche Bank continues to suffer the blows of financial ruin as they continuously centralize themselves into oblivion and get caught up in vast amounts of debt and, you know, the fractional reserve lending and all this kind of craziness, and a lot of us have been concerned, could they see a bailout? Well, we've talked before about how they are looking to lay off 10,000 employees. They've already decided on 1,000 of them being laid off. And this is a huge issue because Deutsche Bank, of course, is one of the world's biggest banks, and it's a bank that Donald Trump has his money in. And obviously, they were downgraded by the S&P recently to, I believe, BBB+, which is a big blow for them. And we've got a lot more information on Deutsche Bank. But before I get into all of that, I want to go into this Reuters article, which says, Fed gives Deutsche Bank others extension on living will submissions. And as it goes into, the Federal Reserve said on Thursday that it was giving Deutsche Bank AG and 4 other financial institutions an additional year to submit living wills detailing how they would be safely dissolved in a crisis. The Fed, along with the Federal Deposit Insurance Corp, said Deutsche, Barclays, Credit Suisse, and UBS would now be required to submit those resolution plans by July 1st, 2020. The banks previously were expected to submit plans by July 1st, 2019. Additionally, the regulator said Prudential Financial Inc. would face a new submission deadline of December 31st, 2019. Prudential's latest plan submission had been due at the end of 2018. The regulator said the extension would allow them to provide additional feedback to banks and give them more time to prepare the new plans. The resolution plans, commonly known as living wills, require large banks to detail how they could be unwound in case of bankruptcy without disrupting the broader financial system. If regulators do not find a plan credible, they could impose restrictions on a bank's activities or even order it to divest. So I want to also make the point here that the Federal Reserve is giving them kind of a longer period of time to come up with this. And I find this to be, well, humorous, terrifying, but a great example of the fact that the Fed wants to put off the inevitable crisis. And of course, the Fed, Deutsche Bank, all these banks are working hand in hand with the massive amounts of fractional reserve lending, just printing currency out of thin air and creating so many problems as all centralized societies do. And all fiat currencies eventually revert to their true value of zero, going back to 1024 AD, every single one of them. And so I feel like this is a great example of the Fed trying to prop it up longer because they know that they're going down. The bankruptcy among banks is insane. John has gone into it. The cash to deposit ratio is extraordinarily bad. Deutsche Bank's actually doing better compared to a lot of them, but still doing quite bad like any other major bank. And this is all going to come down on our heads. And this is another example of people going, well, I'm going to keep my money in the bank. No, if you keep your money in the bank, it's not yours, it's the bank's. Once you give the bank your money, it's no longer yours. So you're not keeping your money in the bank. You're loaning it to an incredibly irresponsible industry that gambles your money away on terrible ideas and derivatives and madness. So folks, John, what do you think of what do you think about this recent story?
Well, I think what we're saying all the time, Josh, we've been saying that these banks are insolvent. And of course they are, because they've been borrowing out mass amounts of money and they've reached debt saturation points all across the world, because a lot of countries today and even the world is 3 times leverage on the debt to actual GDP ratio, which is utterly insane. That shows you how much debt they had to create in order to create anything of value. So 3 times more debt has to be created to create something into the real economy, and that should really scare, because it shouldn't be that much. It should just be 1-to-1 if it made sense, the investment of what that debt went into. But apparently that debt is not really producing very well, and that is a big problem for these big banks.
And I want to, before you go on, John, I have to say this kind of reminds me of, you know, if someone has a really rich parent or something, and you know that their life is coming to an end, you make them a vegetable in a hospital bed or something like that, and put it off and try and get them to write their will. It's like it's coming to an end. I want that money. So make sure that you write the will, because I mean, this is in essence what's going on here. It's like, well, we know that the death is coming for Deutsche Bank and these other major banks. So write the will now before, you end up, falling to your grave and there's nothing else that you can do.
Well, yeah, the CEOs and top executives want their bonuses. That's why they need a bailout or bail-in of some sorts of the banks, so they could actually enrich themselves. Like, look at what happened in 2008, where most of the big banks that were failing, well, they wrote mass bonuses to all the executives right after the whole crisis.
The ones that weren't jumping off the roofs.
Yeah, exactly. And what's interesting though is that with that, giving executives money for doing a terrible job, like I'm not against, giving money to the chief executives or the leadership in a company because they've done a great job. No, that's fine. But they actually gave people money because they ruined people's lives. They stole their money and their bank went bankrupt.
Yeah, they misled people and they led them down that bottomless pit of debt I talk about so much. And that's fraud. That is terrible. That is, how can anyone go to sleep at night knowing that they have screwed so many people over? I mean, yeah, it's voluntary. Lots of things are voluntary, and it's totally within someone's right to fool someone into putting money into something that they shouldn't. But with that said, it doesn't make it right. It's wrong. It's terrible. It's horrible. And then they give themselves raises and huge bonuses, and it's like, congratulations, high five. You helped screw over a whole bunch of people and make them lose everything they had.
Well, of course, Josh, this is just ridiculous, the point where the banksters have been able to do this for such a long time. And they've really been meticulous in how they, have provided the scheme to try to, steal from people, because they've done this so many times throughout history. But usually, people were smart back then and they were able to, break through their schemes, and especially, being able to get a run on the bank and make them go bust. That was, the big old thing. But now, of course, the central bank, which is a communist enterprise, are just, flacking out money left, right, and center in order to save the banks and the infrastructure, because that's what it is. The infrastructure is falling apart and the flawed monetary system, and they are just trying to, it's literally like what they're doing here in Winnipeg with the infrastructure, Jaws, but they didn't put in, proper rebars or anything that you've been talking about so much, and then they just go in and put in like, oh, there's a pothole, oh, another pothole, oh, there's 10,000 potholes now, because it was a terrible job in the first place.
And then the contractors come back and fix it up in a year, and they get more money, and then they once again do a bad job.
Right? Yeah, so that's exactly what it is. It's just a continuous bailout of these zombie institutions. They're basically zombies. They have no real, financial well-being that they put forward into the economy. They're just living off of financialization and being able to, get more debt infused, like a heroin addict. It's a debt addict, which the banks are. They need to create more debt into thin air. And we're going to look quickly at, their credit default swaps, which is an interesting tool that the banksters, what's her name, Blythe Masters, invented back in the day, in the 80s. She invented that, of course. She's out of Goldman Sachs. She used to be, JP Morgan, over there with Jamie Dimon.
Yeah. Before we go into credit default swaps, can you just explain to the audience that's new what a credit default swap is?
It's actually very simple. It sounds very hard to understand, but it's an insurance policy against bankruptcy. But the ticker here is it's not like a fire insurance where you just it's a one-to-one insurance. You insure your house. Nobody else can insure your house, which would be fraud and would be insane if you did it. But here, you could just insure, your company could be insured 10,000 times. And that's what happened during the crisis in 2008. They insured collateralized debt obligations, which is another terrible derivative. There was hundreds of people that tried to insure that. And then, of course, with everybody wanting to take the claim of their insurance, well, AIG went bust and had to bail out AIG.
Yeah, and collateralized debt obligations, to make that clear as well, is just a package of mortgages, say 100 mortgages, 95 are terrible, 5 are good, but you rate it by the top, AAA, which is insane. Anyway, let's look at this chart, John.
Well, yeah, this is Deutsche Bank's credit default swap, and of course, it's not at the top, which was 212, I believe, basis points, so 2.12% that it cost for you to insure it against the bankruptcy. But it's lurking really high. Like when you look at healthy banks, they're usually around 10 to maybe 20. nation. So you're seeing that they're really starting to struggle here, the banks. And this was Deutsche Bank, are in the 140s. They're just a little bit below their peak, but they haven't gone back down again. And then, of course, Barclays have been rising up, from lows of 40 over the last year. And then we look at UBS. You can see UBS is, getting up there as well. And then I took a look at Credit Suisse. Even Credit Suisse, they actually were way higher back in 2017, but now they're getting back up there again. So what this is telling us is that these institutions have a very likely risk of that there's something that could go wrong with them, or else the insurance would be very cheap. It's like if you have diabetes and you have a heart problem, well, your insurance company, you're going to have a very high prime on your insurance that you have to pay. It's the same thing here with the banks, because it's so much risk. There's quite a high premium to pay to insure against default.
To say the least, we've only seen thousands of years of banks going down, and these aren't the savings and loans banks of the past. These banks are out of control. They've got massive bankruptcy. I mean, some of the cash deposit ratio among some banks and credit unions is something as low as like 0.05%. I mean, that's insane. Who on earth would trust that? That's just totally ridiculous. But I mean, looking at Credit Suisse there that you mentioned, John, I mean, it looks very unstable now, though. I mean, compared to what it was, it kind of slowly dragged down, and now it's kind of bumping all around, all over the place, and it seems to show a bit of instability. I mean, we are looking at a time where, yeah, the banks could last a few more years. They could. Realistically, they could. There's more centralization done. The problem, or the thing that creates a problem in the first place, use that same tactic to prop it up longer, but then it all has to come down, and when it does come down, it's going to be massive. These massive manipulators and fraudsters will go down eventually. They have to. But with that said, it doesn't look like they could possibly last much longer. Then again, I felt the same in 2012 when I was watching these kinds of things happen, and it was amazing that it was put off as long as it was. But these have to come down eventually.
Well, yeah, what you got to understand is all these banks, they have had so many defaulting loans and problems and issues with it. Well, they just create a mortgage-backed security, a collateralized debt obligation. It's just insane what they're creating here. And then, of course, the ECB, Bank of Japan, Fed, they've been buying up all this debt, all this derivative debt that was collapsing in order to actually save the system from complete collapse, because that's what would happen. There would have been a mass collapse in all the banks around the world. People would see that there would be no money that they had in deposits in the bank, and that the banks today, they're not like the old savings and loan banks that, you put deposited money into the bank and then they lend out money. Well, now the banks also could be investment banks on top of it, which, it used to be separated. It used to be a savings and loan bank, and then it used to be an investment bank, because that's where the risk is, take huge investment risk. And there's still risk in, in rent, like borrowing money out to people as well. Now, I think, banks, because their scheme is this fractional reserve lending, I think if you actually had a bank that had to just be a utility for you to, just to transact in the economy, not to have this investment, because what you got to understand, that all this investments and everything that has to be done to the economy, you need to make, a return in order to survive with your money. Well, it's all because of the Federal Reserve's currency, which is constantly inflating and losing value. So you need to gain value, you need to invest, and so on. And that's where this whole push for everybody to invest. And now, of course, it's gotten so bad that the whole economy is financialized. Look at the Mississippi bubble, the earliest stock bubble back in the day. It all, when the economy gets super financialized, when there's no real incentive for anybody to actually go out there, create something of value, go in and innovate, what businesses should be out there doing. No, businesses are out there doing share buybacks. They're doing all kinds of debt issues, which then the banks again, use and financialize and get out on the market. Yeah. There's nothing left of the real economy. It's just a dead zombie economy that's left. which is, of course, been destroyed by this financialization from these banksters.
Yeah, and a lot of people have been asking lately in our comments, well, what do we do? Should we take our money out of the bank? What do we do? Well, in my opinion, I personally think that it would be best if you, if you're not going to keep it in a safe at your house, put it in a private vault if you can.
That's what the rich people in Switzerland do, by the way.
Yeah, and use things like Payoneer if you can with your employer. It's a digital payment system. And if you absolutely have to, take the money in your bank account and cash it out when you get it. And that's just my opinion. This isn't advice, really. It's just what I personally would do. And of course, it's difficult to get around a lot of that with employers and the current credit systems and, the way that the banking system is set up. But
just ask your employer to, pay you in Bitcoin. You could actually set that up with BitPay and other payment solutions out there. And you could ask them, hey, I want a little bit of gold, like 10% of my salary I want it in gold. Just take it out and then pay cash and give me gold and silver.
Yeah, but a lot of people, of course, have to spend almost all of their income on, bills, taxes,
because they
all
got
that
so
kind of
much
stuff.
debt from these banksters.
Exactly. So sometimes it's not realistic. So when it comes down to it, that fiat paper money, don't put it in, or money, quote unquote, don't put it under your mattress. It's not going to gain value. It's only going to lose value, and eventually it's going to be worthless. But with that said, I know a lot of you have to pay bills and all that kind of stuff immediately after you get your payment, and you're out of money by the next paycheck, if not a week or so before the next paycheck. I know how hard it can be. With that said, there are solutions and there are ways around it, and I would suggest a little bit of money that you have aside that you might put into buying some candy or buying a movie or watching a movie or whatever. In my opinion, it could be a good idea to look towards gold and silver and cryptocurrencies that are decentralized.
Buy gold coins, not the chocolate kind.
Yeah, and I think it was Mark Dice who offered people on the street a while back ago a chocolate bar or a silver coin. People are taking the chocolate bar. Ridiculous. But anyway, so there are solutions. Food, water, shelter, self-defense are not gathering things for the toughest guy on the block. Of course, gold and silver as insurance of wealth, protection of your purchasing power, not investment advice. This is just history. This is insurance. It's not meant as an investment, as I say so often. And then, of course, there's cryptocurrencies that are decentralized, and there's about 5% of them, I'd say, if not, maybe even a bit less. That's good, but it comes down to your due diligence, because they are game changers if you know what you're getting into and you understand the market, because there's a lot of speculation bubbles rising up in cryptocurrencies as always, but there's amazing innovations on the market as well there that you should look at that are based in true fundamental value. So anyway, John, bottom line?
Well, actually, I want to talk about just one quick thing before my bottom line. And this is because I heard Tom Weiss being a Max Kaiser just a couple of days ago. And he was saying that it would be great if we get an ETF, because he said there's no manipulation in ETFs in gold and silver. There's no manipulation. Will never be any manipulation in Bitcoin, because it's great tool for that's financialization. Tone, listen, you're a banker. You understand this very well, and you're just brought up in that mindset that we need to financialize, and that's all great because these paper assets are so easy to move around, and you could move your money around.
It's the point of decentralization.
Yeah, but of course the banksters, they issue so much more paper contracts than the actual physical underlying assets, so that's why you see the problem. And of course, I guess he didn't see that, but anyways, that was just I just had to make that rant because I was just frustrated with, and I saw Max Kaiser kind of like giving him the stink eye when he said that.
Well, Max has put up a lot on Twitter about how stupid the ETFs are, and Tone Weiss loves government and all that kind of stuff too. So, I mean, that's going to happen. But anyway, thanks for going into this with us, John. And until next time, this is Josh Sigurdson and John Sneisen signing out from World Alternative Media. Find the truth,
be the change.
Like what you see here, OM? Don't forget to check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated, especially as we are so overwhelmingly demonetized by YouTube as they bring in the ADL to flag all of our content as hate speech. Also check our Bitcoin address in the description as well as on the screen for you to scan if you please. And also check us out at Steemit at Josh Sigurdson, the future of social media, where you get paid in the upvote of your post in cryptocurrency, Steem that is. So don't forget to check us out there and find us at Anarchapulco 2019. I know it's early, but this is such an exciting event coming up with Ron Paul, Judge Napolitano, David Icke, Larkin Rose, Jeff Berwick, you know, all the usual characters, and it's going to be amazing. So we hope to see you there. Make sure to check the link for Anarchapulco below and use promo code WHAM to save as much as 15% on your tickets. We hope to see you there. But until next time, this is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.